The story of 2025 was supposed to be a simple one. Tariffs come in, the economy slows down. But as the numbers are rolling in, a totally different and honestly kind of shocking story is taking shape. Turns out, corporate America isn't just getting by, it's having its best year in a long, long time. So what's going on here? That's the big puzzle we're going to unpack today. How is it that with all these new costs hitting supply chains, companies are absolutely smashing their profit expectations? It just doesn't seem to make sense. It's like it defies economic gravity.
And look, this isn't just a hunch or a few companies getting lucky. A staggering 85% of S&P 500 companies beat their earnings estimates in the third quarter of 2025. That is a massive number. It confirms this isn't some little anomaly, it's a full-blown phenomenon.
To really appreciate just how wild this is, we've got to rewind a bit. Remember the predictions for 2025? The general feeling was, well, grim. But what we actually got was a blockbuster earnings season that just flipped every single expectation on its head. This timeline really lays it all out, doesn't it? Back in early 2025, these new 25% tariffs hit, and all the headlines were screaming about a slowdown. But then you fast forward just a few months to Q3, and what happens? We see that record-breaking earnings beat, rate, and the U.S. economy as a whole is just chugging along with a solid 2.8% GDP growth. The big crisis everyone was predicting, it just never showed up. All right, so let's dig into the numbers that really tell this incredible success story. These are the hard figures that paint the picture of just how well corporate America has been doing this year. The headline number you really need to know is 13.1%. That's the average profit growth for S&P 500 companies in the third quarter compared to last year. We're not talking about a tiny little increase here. This is a powerful surge in profitability. It shows companies aren't just squeaking by their estimates, they're growing in a really big way. Okay, so that 85% number, it sounds high, right? But to really get it, you need some context. In a typical year, we usually see somewhere around 70, maybe 75% of companies beat estimates. So jumping all the way up to 85%, that shows an absolutely exceptional level of performance right across the board. So, the billion-dollar question, how'd they do it? Well, this wasn't just luck. It was about having a smart, adaptive game plan. We've basically identified 4 key tactics that make up the corporate playbook for not just surviving, but actually thriving under all this tariff pressure. Okay, so first, companies got really nimble with their supply chains, right? They started shifting production to allied countries to get around the tariffs. Second, they got smart with their finances, using things like futures contracts to lock in prices on materials before they spiked. Third, they carefully passed some of those costs on us, the consumers, with selective price hikes. And finally, they leaned hard into tech, using AI to make their operations way more efficient, like cutting inventory waste by a reported 15%. They basically turned a potential crisis into a reason to get stronger. And if you want a perfect, real-world example of this playbook in action, just look at Caterpillar. They were looking at a massive hit, $1.5 billion in tariff costs. So what did they do? They raised prices a bit, between 5 and 7%, and they cleverly moved about 20% of their sourcing to places without tariffs. The result? Their profits barely took a hit, not the catastrophic drop everyone was bracing for. Now, not everyone had the exact same experience. This resilience wasn't spread out perfectly evenly. So let's zoom in on a company that was right in the middle of the trade war crosshairs, and then we'll pull back and see which whole sectors really led the pack. Which brings us to what I'm calling the Deere & Company paradox. I mean, check this out. This iconic American company was projecting a massive $600 million hit from tariffs on things like engines. So how in the world did they still manage to beat Wall Street's profit estimates? They delivered $4.75 per share when the experts only expected $4.50. The financial analyst over at Seeking Alpha, they just summed it up perfectly. They called it profit resilience amid headwinds. So even though Deere was facing these huge direct costs, they found ways to innovate and execute, using amazing new tech to boost their margins in other parts of the business. And when you break all this down by sector, man, the story gets even more interesting. It's really a tale of two tiers. On one side, you've got the tech sector, which has very little exposure to these tariffs, and they are just soaring with 25% growth. Wow. But then on the other side, you've got the industrials, right on the front lines of this trade war, and they still managed a really respectable 5% growth. This table here gives us an even better look. You can see technology just crushing it, with a 92% beat rate and low tariff exposure.
Financials and energy also super strong. But what's really telling to me is that even the sectors with high tariff exposure, like industrials and materials, they showed some serious grit. The majority of those companies still managed to beat their estimates.
Okay, so we've covered the what and the how, but now let's get to the most important part. So what? What does all this actually mean for you? Let's talk about what you can take away from this, whether you're running a business, managing a portfolio, and what to watch out for next.
So, if you're a business leader, the big lesson here is that these strategies aren't just for the big guys. They're scalable. Think about diversifying your suppliers to build a buffer against these kinds of shocks. Be smart with your pricing. Small, tested increases can work wonders. And most importantly, invest in tech to find those efficiencies and cut costs. And if you're an investor, this kind of weird market actually opens up some pretty unique opportunities. You can look for value in these really resilient companies, like Deere trading at a low PE ratio, which suggests that stock might be a bargain. Or if you want to spread up the risk, sector ETFs can be a really smart play. And definitely keep your eyes on the road ahead. Analysts are already predicting a solid 7.3% growth for Q4. So, looking ahead, the general outlook is pretty optimistic. Projections are showing strong double-digit growth, not just for the rest of 2025, but rolling right into 2026. But, and this is a big but, the one wild card that could change everything is policy. The threat of even more tariffs is still the single biggest risk on the horizon.
And that leaves us with the big multi-trillion-dollar question. Have American companies basically unlocked a new cheat code for adaptability, making them tougher against global shocks for good? Or are we just watching an amazing performance, maybe the last hurrah before the real economic gravity of all this finally kicks in? That's the question we'll all be watching. Thanks for joining.